Welcome to Follow the Money, brought to you by Salv. My name is Dr. Nicola Harding, and I'm going to host a really interesting conversation today between Pallavi Kapale, who has joined us, who I'm really excited to talk to, and the CEO of Salv, Taavi. Now, this conversation comes around because every year Salv do a publication called the Fin Crime Time Machine, which I love because it reflects back on what has been happening and it brings us forward with predictions of what we're likely to see. Pallavi's been a repeat contributor to this publication, which we're very grateful for because she's given us one of the boldest predictions in the whole of the paper. And that's really that beating fraud isn't a technology problem first, but it's actually an organizational chart problem. And that the end game is a collective encrypted network of institutions sharing what they see in real time through machine learning, essentially. We're going to catch up with her today to find out what's actually happened since she made these predictions and reflected on what the industry needed. And we're going to catch up with Taavi to see exactly how Salv has been building the very thing that Pallavi's described and how that's been launched across Europe. So we've got the prediction and we've got the build side by side today with Pallavi and Taavi. Welcome back to Follow the Money and thank you for being here.
Thank you, Nicola.
Let's start with your predictions themselves. Pallavi, how much of what you described back in your contributions to the Fin Crime Time Machine has actually happened? Do you think that you were too optimistic or weren't you optimistic enough? Like what's been happening in the world of financial crime as you see it?
Right, Nicola. So thank you again for having me. I thoroughly enjoy our conversations as always. What you can say, bold predictions, but I have seen a lot of proof coming of it in the industry now. And I'm quite optimistic about the change. So if we take, for instance, I mentioned fraud to be going as a strategic change. Yes, it has been seen in many, many conferences, many organizations, and every conference now the topic is how fraud can be dealt on the management side. Because initially, when I started working in fraud was more like a tick box approach, a prevention approach. Oh, you've saved the customer from falling a victim. That's fine. That job is done. But now currently, fraud sits at 45% of all the financial crime in the UK. Certainly, banks are going wrong somewhere. Certainly, instead of saying the banks are going wrong, we can say the criminals have become more fast. If that is the case, as banks, it is our job to go and protect those customers and not let those bad actors come in. So take the focus on the fraud strategy which has been released this year. So that is another positive thing to see in the industry. Yesterday, I attended the Financial Action Task Force 2026 to 2028 fraud strategy, which talks more about cross-border collaboration. So we might see a lot of things happening on the fraud side. Now, initially, fraud was just like after KYC, it was the fraud department and it was like a very mini department in the financial crime. We have always seen on the AML side, on the transaction side, that actually what happened, what are the proceeds of crime, and we have started from there. So now the industry is going backwards in here, and there is a lot of publications coming out on fraud, industry being very positive on fraud. Another conference which I attended last month, the FCA one, and clearly the industry has calls to introduce all the social media companies under this sector because it is always the banks who are facing the brunt of the losses, we can say. So a lot of push is being given to the social media companies to get under this banner. So I'm quite optimistic for this change. I cannot say that it will happen in the next 6 months, but there is a direction, a positive direction is seen. It is quite slow, but we are getting somewhere.
In the kind of regulatory reshaping that you flagged back then, and obviously some of the changes that have played out, so like SARs reforms, digital ID, Companies House, the Economic Crime Plan, version 2. In your position at Bank of China, how have you seen that actually play out operationally inside the bank over, say, the last 12 months?
So I can do a very good one on SARs because I write a lot of suspicious activity reports and I love writing them. I love all those typology, linking, controls, everything. I mean, I thoroughly enjoy that side of my job. So So with the SARs, what has happened now, because the current, the threshold amount is above £3,000, that is giving the NCA to look lot into much more of quality SARs. So they have tried to define it by, instead of volume, they are getting a lot of quality SARs now. Now, I'm not saying if the threshold is below 3,000, they are not suspicious. But when the bank has the full authority to go and exit those customers below £3,000 threshold, the next thing, what I'm seeing an improvement with the law enforcement. So initially it was NCA and then it was routing it to the law enforcement and all that stuff. Now that NCA say that they can directly send the SARs to the law enforcement. So that technology is been built and they are using a lot of AI to go and connect it to the law enforcement. So I can say after this threshold revision of £3,000, a lot of noise has been reduced and a lot of quality SARs are going up on the system, which is a big change. And because initially when I started writing SARs, the threshold was only £250. So can you imagine how many SARs the NCAs must have received on a daily basis? And now actually they can focus on more of predicate crimes and what interesting SARs they are coming up with. The next development, what we are seeing is on the victim SARs. So initially it was the beneficiary bank as well and the victim bank as well. Both were logging the same SARs on that particular customer. They have cut that noise down now, and you can only see that the victim SARs will be reported by where those funds have gone through. So the beneficiary bank will do it. So that has taken it off. Now, because all these things have been reduced, you could see operationally the investigators get more time to go and look into complex cases and use that time wisely because a lot of noise has gone down. So that sits on the SAR reform. Coming back to the information sharing or the economic crime plan 2, the call for evidence on information sharing, many people raised a lot of objections that they cannot email the other bank directly. So there needs to be what you can say a proper process, a proper contact person, that if I am sending this email to a third party bank, will it be protected? Is it fine under GDPR to do that? Is my legal team happy that I'm going and sending this as minor information to another third party bank? So we can again see here, again, I'm very optimistic on this because I'm very, very focused on this information sharing bit because I would love to do it. And then the banks are taking their steps. Again, it is a bit slow, but we are getting somewhere on it. Companies House, coming back to it, it is a big froster's ground and criminals find a lot of cracks all the time. So sometimes you have cases where the customers have gone and opened account on the same address and that same address has another 50 different customers sitting on that. So that we will leave it up to the KYC team as to how they can figure that out and how you can start pulling them on the system. So, if you're doing the onboarding, but with the Companies House, again, with this IDNV verification, what they have put, I have come across many cases where the customers have started using the specific branch address and they are still going and setting up companies on a specific bank branch address. So those examples still exist and gaps are still there. So
I think it's so interesting to me that we have one of the main problems is a lot of talk and slow movement. And so you can kind of see that we go to different conferences or events or roundtables and we just see there is movement, like you say, but it's that slowly creeping forward. And for me, I think this is where I'll come to you, Taavi, is that it's the only way we can really embed information sharing or embed the changes that are needed is through infrastructure. And that's where maybe you can give us an update, Taavi, on where you are building that infrastructure with Bridge, because it's no longer just about, banks being able to talk to banks, but these public-private partnerships that I've kind of enjoyed talking about and finding out more is that those public-private partnerships are really doing the work of, we've thought this through legally, we know what we can do and what we can't do, and we've created the infrastructure to allow it to happen in real time.
Yeah, it's something like the infrastructure or a rails of the information exchange has been in some countries in present already for many, many years. So this in itself is not a new thing, and we have been serving multiple different countries already, and in the fully compliant encrypted manner. And exactly like Pallavi, you mentioned is also old school emails or in some countries encrypted emails work as well, kind of work. It's not convenient, it's not scalable, it's not operational, auditability is poor. But this practices also through the Swift messaging as well has been there for a long time. So actually there is also proper technology available, which is properly embedded into the daily procedures of the banks and like also integratable with internal tools to reduce the manual work jumping between different systems, and also like automating some of the messages. So that's infrastructure wise, that I can speak a lot about that, but it's already quite business as usual for many countries. What's more interesting actually in terms of the recent changes is that what type of information is being exchanged through this infrastructure, and what's the additional value that it brings to the people. And that's where things get more exciting in terms of change. On one side, we see more and more countries, especially under the EU regulation, usually banking associations of the countries, who are taking initiative to find the proper infrastructure for their banks to start using or start accelerating the data exchange. So we had like just one really exciting story with one medium-sized country in the European Union who launched their tender process in February, and it took them 3 months to go through all the selection process, decisioning. At the end of May, they decided that we won the tender. But actually, this 3 months cycle is a huge record. But in other countries who are moving on, they're moving in slower pace, of course. But actually, the requirements are pretty similar. There isn't anything uniqueness. And then also, like what we see is like regulators in the specific countries are trying to support their banks in the fight against crime. We have spoken a lot about this PSR, Payment Service Regulation, Article 83, and like a cross-European solution. Underneath that, or actually before that, there are other single countries who are changing their laws already to make it more clear and more transparent, especially when it comes to the fraud fighting for their banks. Like we saw like some great changes happening earlier this year in Norway, then in France, now in 1st of July in Estonia, actually. New law states very clearly that banks should exchange data, RFIs, mutual RFIs about fraud cases, but it also says that instant payments can be suspended or it can be slowed down in case of fraud. So that's very clear and strong message for the banks, which before that law, some of them were doing it, some of them were not doing it. It was like uncertain, like can they actually do or not. But now if it's written down clear in the law, like fraud teams in the banks know that actually if they're doing the data sharing, intelligence sharing, which is like part of the infra, then actually what is the benefit that they're getting out from that is like, that's one concrete action that can slow down the payments to win more time. And what it gives them is like, actually they're more confident to do the automated real-time data sharing. In old days, it was only manual, that one agent triggered RFI request manually over the bridge system, and the other bank's operational team had to respond. But now, thanks to these legal changes, they can use the same infrastructure for automated messages, which increases the volume, increases the processing power, and they get more fraud. So speed is improving massively. Actions or countermeasures are getting better. Countries' ability to start using new technologies has improved massively over the last 6 months, I would say.
The speed is such a crucial point, isn't it? And scalability of this is the will is there, the legal kind of precedent is there, and it's happening across multiple different countries. I want to ask you, Pallavi, obviously you're in the Bank of China, which is serving all these multiple jurisdictions across the world. Obviously you're based in the UK, but you've got the cross-border challenge. Obviously some of the regions that Taavi's talking about will include your customers. How important do you think it is that we get to a more global way of doing this information sharing? And what could that mean for in a bank like yours?
I have worked in this industry for a long time, and I have handed terrorist financing funds to another bank without any information. And I feel really sad about that. I'm like, we know that the funds are from terrorist financing. We did receive a consent on the SAR, but then we have to put those funds forward to another third-party bank without any information. So I would love to see that gap closing at some point of time. My experience with the high street banks, a lot of things are in process, and it quite are siloed process that, okay, fine, you work for a fraud investigation team, you are only going to take care of the investigations. You will not see what is happening on the fraud first line side. You will not see what is happening on the beneficiaries. Your only job is to do this and this much amount of work. So those silos need to start breaking down. And we used to worry previously about organized crime groups. Now we are giving organized crime capabilities to even ordinary criminals as well. you see the barrier of entry for all the fraudsters. It is so very low at this minute. Initially, there were like people specializing in talking fraud and all this romance scams over the phone now. But now if we see fraud as a service, phishing as a service, I mean, it is just like on a click of a button, they are able to buy everything. It has opened up a lot at this minute. So instead of just going to the KYC team first and then the fraud team, all these silos, very good examples on the contact centers, because I started my career in a contact center role. So it was a big achievement for me when I was like, oh, I have caught one fraudster today out of my entire day from a 9 to 5. And then that used to make me feel so happy. I'm like, oh, I was able to stop one person from accessing some account. But now you've got those voice cloning calls calling, and they are actually pulling out those funds. So the change needs to come on the contact centers first now, because that is the source where they are all attacking at the moment. So what I can see is breaking down of the silos. Criminals are, they are innovative, they are very agile, and they know how every bank works on the high streets. Definitely, we all as a bank also need to break those silos and get things in place to say, okay, we had a fraud loss here, we had an AML loss here, and this is how we are going to sort this out. A lot of high street banks are applying for this approach, but again, everything is going very slow at this minute.
The contact centre point is a really crucial one as well, isn't it? Because it's such a place where you can gather such intelligence if we've got the structures and ability to do something with it. So a lot of the work that I'm doing more recently is talking to contact centres or to financial institutions around the role that their contact centres play in that gathering of intelligence, but with the victim. So how do they intervene? And it's, there's real skill, and the data gathered there is going to be really important for whatever investigation comes next. But that information has to go somewhere. I guess we can't just rely on, payment risk scores on the payment rail. We have to bring all of that intelligence together, whether it be the investigators, the kind of emotional first responders and the contact centres who are dealing with very emotional victims or people who may be victims and not even realise it yet. But also, that gives a wealth of what's actually going on that needs to be kind of brought together in a way that's useful and given to the right people at the right time. Taavi, in terms of where we've seen Bridge being used across Europe, in this, Pallavi's just made a really good point around things like there's deepfakes and synthetic voices and the fraud as a service. Like, how are we seeing Bridge and the movement in Europe so far? How are we seeing that disrupt some of these networks? And is it posing a particular challenge for you guys, or is it something that you're able to actively tackle?
For me, I think these are like the two parallel discussions which are semi-correlated. But what I see is like the fraud business model, or how the fraudsters are operating in this decentralized organization and also using more and more modern technologies. That's definitely happening, and that's also something we need to be very well aware of. And I'm also glad to see that many new startups coming up are tackling these specific problems, like multiple companies who are building their AI agents, playing the victims in front of fraudsters to waste their time, who are trying to gather the evidence or data points about IBAN numbers or like fraudulent entities that they can actually provide to the banks. So there are like definitely companies and initiatives going on to tackle this kind of newer like trends. At the same time, when you're asking from my own perspective, what I see is like the average level of the crime fighters or like capabilities is so low that fraudsters do not need to use any of the modern technologies. They just like need to be a half a step ahead or one step ahead. There doesn't need to be any deep fake stuff actually. Of course, they're innovators and they can use it, but actually it's way cheaper or like whatever. Way more efficient to use just old school technologies, because crime fighters are not doing very basic hygiene stuff. One of the core parts of the fraud fighting is that you need to get more data in real time. And if you get more data in real time, you can build all the wonderful engines to make fair decisions and investigate and so on. And that's like still the repetitive problem is that you cannot use even raw data which is gathered internally, and like institutions first need to resolve that part of how to give access to the crime fighters in real-time data what they already control. But it gets even worse if you talk about real-time data from from other institutions around them. And as long as we haven't resolved that problem, then fraudsters can use very, very basic technologies and they still make the money out from it. And what I also see is actually things that we are, as a broader community, we are doing to tackle the fraud. Again, in the EU, there is online identity or e-identity, or IDAS 2.0 program, which just gives a virtual identity for the people. And crime fighters in many countries are actually expecting that this virtual identity will help to reduce the fraud, because in theory it should be more certain to verify and check who's behind the scene. In real life, it will actually increase the fraud, because what we have seen in the countries where the e-identity has been used for a long time, what happens is that the fraudsters find it super easy to take over your whole virtual identity and to log into banks, but take loans on your behalf and do all the other things as well. Of course, this e-identity is super good, super useful for the end users and consumers, but this kind of siloed knowledge or perceptions that, something that crime fighters are expecting to make their life easier, actually it will make their lives harder, way harder. It will make things easier for the criminals.
Such a good point. I mean, both of the points that you made, but the identity stuff is something that not just in Europe, but I frequently work out in the UAE where there's different jurisdictions have similar kind of identities, and it creates a culture of, okay, well, nobody can pretend to be us because we all have our unique ID and it's very government, and it creates almost a false sense of security that because that's in place, then nothing can possibly be done to mess with our identity. It must be true. And as you've quite rightly pointed out, Taavi, is that when a criminal can get hold of that, there's no checks in place later on, because you're not going to ask them to validate their identity a different way. You've already done it at that point. So when it's compromised, it becomes kind of even bigger problem, I guess. I'm going to ask you guys a bit of a wild card question. There was a trend at one point, maybe about 5 years ago, we talked about friction versus fraud. We had the customer service and the user experience. People in banks wanted to make it frictionless, onboard people, faster payments, do everything quick, slick and everything. And that created a real big problem for fraud and financial crime. And actually, we've all come around to the idea that actually some friction is good. Healthy friction in the right place can make people stop and think and all of these things. So that argument of friction versus fraud is kind of maybe nearly gone away now. What I'm seeing emerging is privacy versus fraud. And I wanted to ask you about that in light of it's something that's brought up a lot. Surface level conversations about data sharing. Privacy is used as a reason not to, GDPR or what have you. And we've definitely unpicked that on various episodes of the show and in other forums to say that's simply not true. But another example is this week, WhatsApp announced that they will no longer use phone numbers. They will go to usernames, which is a privacy by design, arena. You just don't necessarily want to meet someone and give out your phone number to them because that feels more like personal information. But in doing that, we've prioritized privacy. What do you think the knock-on effect for financial crime is?
It is, again, going to create a bit of a chaos because, it will work different. Nothing is changing. Whatever we are doing, we are giving rise to more financial crime. We are giving rise to more fraud victims here who will potentially fall a victim to a scam again. So, friction versus fraud was still okay because you were like, oh, that is the customer. Customer has logged it in his bank account. Are you sure you want to do this payment? Are you sure you want to do this? All those questions were asked. But again, with the privacy now, the controls need to change. The controls need to be designed accordingly, keeping in mind as to what information the customer is going to disclose. Again, we will say the industry needs a proper process here. The regulator needs to come back in, step in to say, fine, this is what we are seeing at this minute, and why don't we start doing it? But then again, it will all be slow. Mules are across all the banks in the UK. If I close a mule down in my own bank, and that person can go and open the account in another bank in the next 20 minutes, 10 minutes down the road. So that cross-border detection, again, with these accounts as well, it needs to step in and something concrete needs to come in because end of the day, we are giving rise to more and more victims here. And it is not good when the victims are losing so much money and the industry is not able to do anything. There are cases where victims have lost so much money, but the the thing which stays in their minds for such a long time, the guilt what they carry, even if the bank has reimbursed them, something needs to be looked into on that side. So, I mean, that makes me feel really sad that, okay, you have reimbursed, but then end of the day, that will still stay in your mind for a long amount of time. Yeah.
Yeah, absolutely. The harm is always more than
Yes.
the financial. And I think
Yeah.
it's when we're dealing with numbers, especially if you go back to what you said about SARs at the beginning,
Yeah.
under 3,000, you now don't need to produce one. £30,000 to a large business may not feel like a lot of money, and
Yeah.
it may not have the emotional harm, whereas £300 to someone who hasn't
Yes.
really got that to lose can be life-changing, devastating, and
Yeah.
really have much longer ramifications, particularly if it was done in a kind of controlling, coercive way. So you're absolutely right, Pallavi.
Yeah.
Just going back to the privacy versus frauds position, Taavi, this is obviously something you guys have had to really pull out and understand the legalities of, particularly when it comes to data sharing. Do you think that in the current environment that there is a bit of a pushback on privacy and that that's impacting financial crime?
Yeah, that's when you brought up this WhatsApp example, then it reminded me my work 20 years ago in Skype, where I was like head of data science and fraud team. And in Skype, we had usernames and they were like,
Yes.
everyone could choose. Was it like Taavi Tamkivi
Yeah.
or was it some random combination of the letters? So people were free to choose and Skype covered like the whole world. But I never thought this like, I need to know exactly who is the person behind this anonymous account. So that's why I'm still wondering, why does WhatsApp need to have these phone numbers? But going to this our current topic and discussion, I feel that it's this privacy and GDPR is still used by many people as an excuse not to take serious actions, and it's like more convenient not to dig into the details of the GDPR requirements, and I've seen so many misinterpretations or like what you cannot do and what you can do. What is privacy data? What is not privacy data? Like IBAN number, can be treated as a anonymous username, which can mean anything? And is it okay to share with other banks around you, like how old or what's the age of this IBAN? What's the average incoming volume to this IBAN? Outgoing volume from this IBAN? Actually, if you look at some of the European-wide data providers, they are sharing this type of information quite freely, which means that IBAN for them is not like super delicate PII data. At the same time, for some banks, it is still like they're treating it as something that they cannot share with anyone, and like that's easier not to take action if I'm using this excuse. Some companies are saying that the GDPR, like PII data, according to GDPR, to be treated with the highest security standards available in the market, which again, according to us, is not true, because if I'm reading the GDPR regulation, it has to be secure. You cannot overspend it. You should not make it overly complex, but of course it needs to meet your legal obligations. There's also, I think, ongoing learning about what is the level or like width of the data points that need to be shared in order to hand over some really crucial signals. Some people think that, okay, I would need to transfer the whole KYC profile over from my bank to other, and they think that, wow, it's like crazy, I cannot do that, which is correct, of course. But actually, to give the fraud signal that this single transaction is most likely to be fraudulent, you don't need to give them the name of the customer. You just need to refer like a transaction ID, or is it the IBAN number, maybe amount, which is already something completely different from the whole KYC data. And if people are not willing to get into this level of discussions, analysis from legal point of view, you compare like AML regulations, fraud regulations, and GDPR, your own internal risk assessment, compliance procedures. It's of course easy to say that, yeah, privacy is more important than the fraud fighting or vice versa. And it's not constructive discussion at all. But I am happy to see that bank by bank and country by country, people are willing to dig into this RFPs that we see coming in from the banking associations. They are like very mature in terms of like what they are requesting technology providers to give them. They understand really well what's their members' data processing rights and duties versus what's expected from the technology providers. So this maturity is spreading around, and it's like way easier to come up with constructive solutions as well.
I mean, I agree with few of Tavi's points as well on data sharing, that it has been made like a major big thing. But then before the pandemic, before all this GDPR could kick in, I was in a role where I could call up the third party bank to say we have concerns on our customer. It's a mutual customer. And just the normal questions, 2 minutes, like have you funded the customer funding his account with wages or benefits? So the opposite person will say something. It's only benefits. Fine. That starts building up a picture rather than just making it a big deal. We just want to know as to what has actually happened to that particular transaction. And I agree with Tavi's point there because I have been in that roles before. I'm like, okay, funds have gone to that bank. Let us see, has the customer withdrawn or has it been paid to somebody else? And you were able to build up a picture of the customer on your side. So, I mean, many things. And I'm really, really very sad that it has all gone away because we used to get a chance to speak to the other banks at that time, but keep it very short and sweet. So many minor things. And instead of making it like a big deal, just some small, tiny information can add a lot to your investigations or can add a lot to your SARs as well.
And actually, that's really, really important point that I think people should get it is like you compare the pre-pandemic data protection layers. It was also legal back then and it's also legal to do it now.
Yes.
It's just now we have more clear rules of the games determined and people need to know how to use these rules. So it's not about lack of legislation or overly controlling legislation, and then that's where there's need for more maturity in the responsible people's head to say that, yes, I'm following it. I've been following it all the time, but these are the restrictions like audit logging, 4I principles, whatever. There are extra steps, of course, but they don't mean that I cannot do the stuff that you did already some years ago.
Just calls for really strong leadership and transparency when it comes to what this actually looks like. It's one of the reasons why I really like talking to you, Taavi, about what you've done in other jurisdictions, because it offers a roadmap. It means that people can be reassured. And I think in a world where there's so much at risk within our positions, we've got so much uncertainty around AI and what it means and, what the regulation changes may mean. There's so many changes at once that actually having strong leaders that do know what they're talking about, who are able to give good guidance in a really practical way, can be really, really helpful. So if you were writing your predictions on paper again today, what would you change, sharpen, add? Where do you think we're going for the next kind of 12 months?
I would love the social media companies to come under one umbrella. I would really love to see a lot of changes on that front because every fraud and scam, wherever it starts, the origin is social media. And that's why we are not able to do anything. As a bank, I can only see that the customer has lost money at this time. That's all. That is the story which I get to see. I don't get to see whatever ad or whatever the customer referred on the social media, has that been taken down. So it is very high time for the social media companies to come under one umbrella and get these things sorted. And I would say another one will be, AI. This is the first podcast where I've not mentioned about AI. AI is available to everyone here, but the real differentiator won't be the one who will be having the best AI. It will be more of the best data, who has the best governance, the strongest collaboration, and the courage to redesign their financial crime as programs as to how the criminals are operating and how they get all these things in their risk assessment coming up. The banks have gone digital, everything is digital, but this financial crime is becoming more industrialized and our response needs to be evolving much more quickly.
Absolutely. What about you, Taavi? What do you see over the next 12 months?
It depends heavily on the region or the countries we're speaking about. But if I would compare UK and the rest of Europe, then I would say that in UK, thanks to several good initiatives like the Stop Scams or Global Scam Alliance, thanks to the FATF leadership, I think collaborations between different sectors and industries, like Pallavi mentioned about the social media, but also telcos, we're going to see more these kind of great initiatives and some success coming out from pilots or the real life stuff. Like in terms of banking, banks themselves moving fast into the efficient crime fighting, reducing the fraud losses significantly. Maybe that will take a bit longer time. Whereas in the European Union, I would say that thanks to the payment service regulation, which is coming up, more and more banks and associations will find that, okay, it's actually coming and there is like mandatory things happening. And this liability is put on the banks, not on telcos yet, not on the social media yet. So banks will find out that they are under huge pressure to resolve that, which means that they will start moving faster with different initiatives. Again, data sharing being part of it, but also like the speed of actions. And that's where I agree that AI agents can help to make faster decisions, but not only them, like it's also like direct API integrations between the systems will also help, because like quite often these decisions are pretty simple and programmable. They don't need to have a broad context and dynamic decisioning where the agents are good, but actually just very straightforward. This happens, then send the message there and suspend the payment. So there will be like more of these kind of technology providers who will help to automate things agentically or non-agentically, just to increase the speed of these transactions and controls over them.
I would like to add one more point as well. After the PSR came into the UK, it takes only the UK jurisdiction. Like I can go and talk to another third-party bank that the funds, our proceeds of crime and all everything. But now fraudsters have found a gap of moving them to a cross-border payment. So the cross-border payment flows need to be streamlined more. More, what we can see is what countries are your customers sending funds to. So get those countries on your watch list or on your transaction monitoring system and start stopping those payments, start intervening within those payments and go and ask the questions to the customer, because they have found a very good crack that if it's a UK account, it will go under scanner. But if the funds are traveling international, that will not go under scanners.
I think whenever we have a tightening of a rule or a regulation that means that we can't really do something, we just get displacement that sends it kind of over there. And the only way we can truly tackle this problem is by the threshold rising everywhere and all of the layers being covered or overlapping. And that is the constant problem. Predictions are very easy to make and much harder to hold yourself down the line. But both of you just done that, reflecting on where we've been on, and again, where we're going to go. I think there's one thing to really take from this conversation, and that it's the collective network isn't a someday idea anymore, that it's under construction. We're all part of it piece by piece, and that we'll be back in to check on it again, I'm sure. So thank you both so much for joining me on Follow the Money, and we look forward to seeing you again soon.
Thank you, Nicola. Thank you, Taavi.
Thanks both.